Greetings, it's Dr. Jeffrey Scott, and this is my weekend market update for Sunday, January 29th, 2023. I'm doing this from my home in Santa Fe. It may be my happy place, but it's not my best audio. I still need more furniture to kill the echoes. Title this, Breakout or Fake Out? Will bulls be trapped? I think that's a key question as we go into a week with oodles of news and earnings. Email address sits in the lower right-hand corner, hgsidoc@gmail.com. I respond to comments and questions, concerns, either email me or put it into the YouTube remarks section. And if you're new to my channel, welcome. If you're not, welcome back. And if you're new or you're not getting updates on this, make sure you check off the subscribe button and hit the alarm so you get notice when I post these. As always, these are for educational purposes only. Anything I talk about should be considered in the spirit of education. It is not investment advice. I'm a doctor, not a broker. I am independent. I have paid for the tools that I use. And trading involves risk, and you alone are solely responsible for any investment decisions you make. For those who like this video, hopefully you wouldn't be here if you didn't, Monday through Friday, I will post shorter versions, and this is really designed for during the week for the wealth charts users, and it's at www.stocksanddocs.com. So, start with the major market story. You know what? Let's just go to the key. NYSE is in a new bull. Technically, it's up 20%. The diamonds are up 18.5. The Russell 16.7. The Spiders 16.5. And woohoo! The technology-leading NASDAQ, both the composite and the Qs, have joined the party. These are the returns off the 52-week lows, which are now 106 calendar days in the back. This has been a heck of a rally. If we look at the week, very strong week, led by technology, up 4.8 on the Qs, 4.3 on the NASDAQ, 2.5 on the Spiders and the Russell, and the Dow, which has been a leader, and the NYSE, and you can tell they've been leading the highest off their lows, a little bit more modest, 1.2 to 1.8 gain. The big winners on the week, FANG, although this is a leveraged ETF, up 9.2, the ARK 10.7, and I'll come back to that, especially look at Friday. I think, as shown here by the improvement in the IBD 50, we're seeing some improvement in small cap growth, which would help ARK Innovation, plus it's so heavily invested in Tesla. If we look at on the week what was the strongest, again, it's a laggard story. Real estate, discretionary, and communications and technology have led. Now, if you've been here, what have I been talking about the last couple of weeks? I've got money bags on technology and discretionary because they definitely changed. I commented about real estate doing well despite staples and utilities selling off. And then communications, which is probably a lot of Meta. If we look at the week that just ended, you could see that 78% of the stocks are above the midline of their Bollinger Bands. That's bullish, but not excessive. If you look at on Friday, 73% of sectors were up, 60% or so of industries, and a little bit less than 60% of stocks. The buckets we'll talk more about. If we look at sector performance on Friday, staples, energy, interestingly, information technology lagged, and the leader was real estate, and I certainly saw that as I looked through a lot of charts. If we look at the 5 days here, you could see a strong week in the markets, and all the sectors were up, 89% of the industries and 74% of the stocks. Hopefully you had good returns on the week. You know, we've got a Fed meeting. It starts on Tuesday. We get an announcement and a press conference on Wednesday. And if you look at the 10-year on the left, the 30-year on the right, almost identical patterns. You could see we peaked and came down, we bottomed and came up. So the S&P really functioning opposite of rates here. It'll be an interesting session. I think they telegraphed a 25 basis points move, which is lower than the last. And people are going to be listening for any sounds of pausing or one more small increase and what they think the effect of inflation is. Now, all you got to do is read any financial press to see the discussion about is a recession coming. And two things that still worry me a bit, although as you'll hear, I've invested in this market, is that the credit spread is still elevated. When it happened in 2018, late in the year, the market sold off into 2019. When it happened in 2020, we know what happened with the market selling off, and it's still elevated here. The other thing to be concerned about is that the 210 inversion is not getting better, and that's another thing that likely predates a recession. If I was to go back to the 60s, you would see that the recessions usually occur after you come back above baseline or above the zero line. Market participation approaches overbought. Look at how high we're getting on stocks above the 200-day and stocks above the 40-day. You know, we're at a point now where we didn't see almost all 2022 where the majority of stocks perhaps are above their 40-day or 50-day moving average, and that 50 is above the 200. That's a much more bullish posture. Now, I think it was 2 weeks ago I said, man, we're hitting this line here. Markets always come down, and we got a little bit of a correction. Not much, but you could see in here, pull back a little bit, but then here's a pullback, then we roared higher. We're at a level, again, we're approaching overbought. Now, after a big market decline like we saw in 2022, it doesn't mean that we can't continue to go higher here. Buckets, here's that 78 above the midline, and you can see very few stocks are above the Bollinger Bands. When this line here starts getting to the 30s or 40s is a strong signal to be careful. I would not expect to see a Hindenburg omen for a while. We did have a spurious one in December that was bizarre because you don't usually see them except at tops. But what I am watching here is the percentage of new highs growing on the NYSE and stable on the NASDAQ, and you don't see any 52-week lows. That's a big move because we were seeing, well, we see some always, but we don't see the red line. It's a big deal because throughout all of 2022, even in market bottoms, we saw a lot of new lows. Now, this is the most confusing picture of the edge rater warehouse view I have ever seen. Why? Because let me just tell you what we're looking at. We're looking at percent return from January 22nd to January 27th, which was basically the last week. If I had waited to Sunday to run it, I would have said 29, but it was end of day Friday. We are looking at how the percentage return was compared to ERG. ERG is something that Ian Woodward and the HTSI group put together a long time ago, EPS rank plus relative strength plus group rank. If each one is ranked 0 to 99, you could have a max of 297. In a great growth market, you'd see the line going from lower left to upper right, where the high growth stocks are outperforming. So the good news is, and again, we throw out the tail and we throw out the head, and we do that because the number of stocks is incredibly small. So if we take those out, everybody was up on the week. But then we had this crazy spike here. So I'm going to do a little bit more research, but my guess is Tesla was sitting there. It was up 35% on the week, and it was the big mover. Shopify was up almost 25% on the week, and those could have been part of it. I think what we're saying is these things were junk, and every week now we're getting the spike and it's moving further to the right. And I think that's a sign of healthiness. Now, earnings per share rank, really no correlation except for the stocks here, which probably correlate with this group. And interestingly, the best relative strength return were in stocks that were low relative strength. So again, favoring junk, favoring things that are beaten down. And if you think about what's working now, that makes sense. Because this is Sunday, I get to use what I think is the best calendar. And here it is. Just type in Econo Day economic calendar in your Google Chrome or whatever browser you use, and you'll get to look at this. The red dots are the ones to be concerned about. So Monday, not a whole lot. Tuesday, got some auctions, but what really gets interesting, consumer confidence and a PMI. On Wednesday, we've got ISM manufacturing, we've got some jolts, petroleum, but what we really got is a FOMC announcement at 2 o'clock. You could see the meeting starts on Tuesday. So this is Wednesday the 1st, FOMC announcement at 2, conference at 2:30. Thursday, jobless claims. Friday, monthly unemployment report. So this is a doozy of a week for news. And what about earnings? Yeah, that's why they got their own sheets. There are some big people here, or big companies here. You can pause it and look at it. I put this in years ago. Other people may have said it. I never heard it from anybody else. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Now, the market has changed some. You still get hammered if you miss your earnings. And think about what happens at these earnings announcements. You get the current quarter. You get earnings and revenue. You get the prediction for the rest of the year in earnings and revenue. You also get potential for announcements. And then you have the whisper numbers, which are numbers that are talked about on the street but not written down. Sometimes the market hits the number projected, beats it, but don't beat the whispers, and they sell off. So there's lots of danger around earnings. Now, this is the site here, earningswhispers.com. I picked this off of Twitter, but this is a great site to get a sense of where the earnings are. And enough said about earnings. Make sure you know when your stock's earnings date is scheduled. So, well, that's the Wall Street Journal, not the Wall Street F. On Sunday, they came out and talked about a Fed pause. Later in the week, we heard about businesses predicting a lower risk of recession. I talked about the market strength. Tesla and Shopify were up big, as was ARK. Midst of quarterly earnings, we held up well despite big earnings misses and disappointments. Coming week will be a doozy. Fed meeting, jobs, monthly employment, and massive week of earnings. I added to my long positions as the week went on. I think there are lots of reasons to be concerned about this being a bull trap, but the sentiment suggests we go higher, and I'm not fighting the tape. I'm keeping tight stops, continue to hold some cash in reserve, and I'm closely watching when my holdings have earnings. I've had a great start to the year. I'm sure you have as well. It's been a really nice January rally, and if we can hold up the next 2 days and stay above, I think, 4 or 5% for January, that foretells a very, very strong market for the year, especially after a bad market the prior year. Now let's go take a look at what I'm seeing in the market. This is Wealth Charts. I start every day looking at hot stocks, and I mentioned this before. Just if you don't believe me, my videos are archived. I've been talking about discretionary coming up off the bottom for at least a couple weeks. It's now got a flame. It's approaching 800. And we started looking at banks, although mostly at regional banks, the last couple of weeks. Both of those have some flames on it. Looking at the indices, you can see some good and some bad. So let's just blow up the spiders. It's mostly good, except for what happened at the end of the day on Friday. This is a 5-minute chart. And, you know, I'm not going to make more of this than I need to. But you can look at, here's the opening bar, a little bit of a head fake, and then we rally the rest of the session staying above the moving average until we get to the last half hour. And if you were watching your P&L on the day, we gave back some in the last half hour. Now, was that just prepping for a weekend? Probably, especially with the news of volatility we might see this week. But I'm going to keep that in mind about how we open. Now, if we look at the daily chart, you know, we have broken through, and you know, just in case you haven't been here before, I call this the mother of all trendline resistance, going all the way back to January. We have broken through that. There was also a wedge. We broke through that. So one could be very hopeful that what was once resistance will become support. And then we also have this support line, and if I remember, which is, there is a bar that goes all the way down here. Hard to see it with the volume. Let me see if I can scrunch it up for a second. You can see part of the bar. And I can lift it up. So that, you know, if I want to be really optimistic, do we come and retest, which would be totally fine. And if resistance turns to support, that would be extremely bullish. And then do we start to run up this trend line? Boy, would that be amazing for the market. So jury's out. I think we can be, you know, have to be happy with where we're at if you're a bull, and let's hold on to support. I think that's critical. If we look at the Qs, a similar pattern. Notice they've all taken out their 200 and their 50. You look at the diamonds, which had been the leader, breaking out first, pretty much held at support, at least the 200, and is going higher. We'd like to see that hold. The Russell, a similar pattern, and the things that are not working are the things that you want to not work. The VIX is very low. This is the VXX, which, as many people have commented, doesn't work anymore. And then the dollar is just bouncing around here at a low rate. So exciting. Commodities. Gold, as the dollar is going sideways, I think perhaps also because of the Fed meeting, if they did more rate hikes or higher rates increases than expected, that's bad for the dollar. So the dollar's lagging a little bit here. Nothing serious. We'll see what happens. Silver looks totally different than the dollar. And after coming out of the 200 much faster, has gone sideways. Oil, bad session on Friday, down 2%. And I don't know why even look at natural gas. Someday it'll wake up, but it's still toast. And then if you look at the 10-year, we're kind of bouncing around here. We're up a tad on Friday, 0.72%. And obviously 10-year and everybody else are waiting for the Fed report. The weekend's the best time to look at my weekly market timing signal model. Why? Because the bar doesn't close until the end of the day on Friday. And you can look at all of them, the spiders, the Qs, the Russell, and the diamonds. They're all closed well above the 30-week WMA. The weekly bongos are green. So all four of these are on a buy, and my conviction is higher than it was a week ago. Market theme. If we look at what happened in 2022, we saw that, let me go back here. Large caps. This is IWB, large cap versus small caps. And into the peak, large caps dominated. And then you could see large caps stayed stronger. If we're up on this side of the chart, large caps are leading. Down here, it's small caps. If we look at on an hourly chart, you can see that small caps, since this rally started, have actually outperformed the IWB. The last couple of weeks, we're seeing some large caps rebound. If we look at growth versus value, if we're up here, it's growth in charge. Down here, it's value. And again, in 2021, we saw growth. In 2022, we saw value. And if we look at the short-term hourly charts, you can kind of see that value is starting to be replaced by growth. So growth is good for this, it would be good for a lot of our portfolios, and growth coming up might mean a shift away from some of the value-based defensive stocks. Now, I don't see a good reason to go look at bearish types of things, so let's start in the heat map, and then let me pull up for my watch list. All right. So the heat map shows us, despite really strong days in the market this week, a strong week, the S&P 500 finished mixed on Friday. If you look at individuals, green and red, but look at the big cap tech, especially led by Tesla, up 17.89%. NVIDIA was up 4.76%. So big cap tech really kept the S&P 500 up. In fact, if we look at the NASDAQ 100, it'll look even much more green, doesn't it? If we look at Wealth Scanner to get a sense of what's working in the market right now, and you can use Wealth Scanner on stocks, you can use Wealth Scanner on indexes, sectors. I have a group here called Top Down Indices, and I like to use Wealth Scanner on that to tell me what's working. So I'm looking at three things when I look at this, well, besides the order. I'm looking at the number. When I see a number of 850, I know that this trend has been coming on for a while, and the relative strength of this to the rest of the market is outperforming. So communications has done quite well. When I see this red 100 there, it tells me it's getting extended. Doesn't surprise me. Doesn't mean it can't go higher. When I see the arrow, it tells me it's going up. And when I see the flame, it had an extraordinary move up. So communications, retail, fintech, global real estate, semis, pharma, biotech, REITs, biotech. This is a very big change. Where's energy? Energy's fallen off. So if I wanted to do pure top-down investing, I am thinking long the market, and I'm going to look perhaps at communications, maybe retail, and REITs. Let's start with that. So I can go into my CAT scanner, and my CAT scanner is make sure it's set up for what I look for. And what I look for are stocks that are in an uptrend, have a little bit of a pullback, and then move up on momentum. To get that, I take my CAT scanner, I put price and volume. Since last week was a full week, let's go to 10 bars here. And what I'm looking for is only bullish stocks. I wanted the bongo to reverse higher 10 days ago or more or less. I want bongo bullish daily and weekly. I'm going to apply that. So I should see no downtrending stocks. I rank them by the dots, and the top things come up. So we talked about hot stocks on banks. That's a bank. That's a bank. That's an interesting application software stock that's been clobbered. I might look at that. Chewy is a retail, automobile. So we'll look at some of this, but we wanted to start by looking at communications. Now, to be on this list, you have to have had a recent reversal and have some ongoing bullish signals. So a lot of things that are working and have been in a long move might not meet these criteria. So if I look at communications, I can see a couple of things that pop up. And I really am liking Snowflake here. I don't know NCNO, Encino. So this is a pattern that we're seeing a lot. And by that pattern, since we've been in a downtrend for quite some time, we're starting to see stocks moving up, and still some are going to have not only overhead supply, meaning if it only gets back to this point I can sell, but they're going to start bouncing against that overlying moving averages. I look at, this is my impulse indicator, which is free inside wealth charts. It has a squeeze. When it goes green, it means we came out of the squeeze. The first dot up is my momentum dot. The second one is a breakout. The third one, if we have one, is volume, which we don't have much volume here. And then the fourth dot would be a big gap up. You know, it's okay. I don't love this. Don't know anything about it. There are better things out there. Unity Software, boy, that's one that was a big runner in the past. I mean, look what the stock ran up to. This one peaked at about 210 in November of 2021 and is off its lows, but still less than 36. Now, let me introduce you to some more things on my chart. For moving averages, I like the 200 in red, the 50 and the 17 in simple in green, and the 50 simple in yellow. The 200 is also a simple. The green dot is Rob Hoffman's wealth signal, which is free in the program, and the triangles are my EMS signal, which are part of my marketplace package. These three here are my bongo. They're my trending indicator. The top one's daily, the second is weekly, the third is monthly. When it's green, consider it to be in an uptrend. When it's red, downtrend. So this tells me that it's in a short-term uptrend, daily and weekly, but it's in a downturn, long-term downtrend, as you can see here. And if you look at the weekly chart where it rolled over, maybe a week or two later, when the market still hadn't died, the weekly had turned red, showing that the uptrend was completed. Not my favorite looking chart. Pinterest has been interesting here, and let's look at why I might like Pinterest more than those other two. It's still going to have issues with overhead supply. It only had the one dot, which here would be the breakout dot. It had my EMS signal, but notice how it's above the 17, which is above the 50, which is above the 200. And short term, I could see this thing running. This one looks okay. It doesn't look great. Down here, I've got relative strength versus a WMA. I like that to be shooting up, just like on balance volume is versus its 10-period exponential here. I did like Snowflake, and let me tell you why I like Snowflake. This week on my day job, and my day job is I'm a founding shareholder of a healthcare technology company. This is probably my fourth company that I've been part of. And we have just finished a migration to Snowflake. And what this does is it increases the efficiency of what we do and allows us to ingest data much quicker. This week, when I was in West Palm, we met with two Fortune 10, Fortune 15 size companies, one mostly US, the other international, and they both are using Snowflake. And the more people I talk to, they're using Snowflake. I think, you know, if you think about the Peter Lynch theory, you kick the tires. I'm going to kick the tires here, and I think this might be a nice place to take an entree. Yeah, it would have been a lot nicer at 119 than it is at 159. This was a $400 stock, which I'm not sure it's going to ever go back there anytime soon. But why do I like this here? I've taken out that last overhead moving average, the 200. I had massive volume, which is that dot. Both my daily and my weekly bongo are green. I'm high on the high jump, but when I'm sitting on the 200, I'm going to ignore that. And then if I'm looking here at the relative strength, you know, my signals would have started getting me alert down here. Still probably wouldn't have bought it. But we're breaking out on relative strength versus the spider. OBV is strong. You know, we got to clear that 50 on the weekly. But this looks interesting. Well, it looks more than interesting. This looks attractive to me, and it's on my buy watch list. Now, going back to the scanner, I think the second one down was retail. Now, I haven't looked at retail yet. I've been a big fan of Capri. Before I go to retail, let me just put in Meta. Why didn't Meta come back up on the scan? It's pretty easy to show you. Meta's already run, Okay, Meta is going to show up down here, which is when it was interesting, when it was basing at around 117. And you notice the EMS squeeze, notice the relative strength is starting to move up. This is when it was interesting. Now, the high jumps at 100. We're getting extended. Let's go into retail. Now, if you're doing this at home, you're going to say, but I don't have all these. That's because I've created a lot of, over the couple years I've been using the software, a lot of groups. So I tried cleaning them out from time to time. So on retail, Chewy we mentioned before. So don't like what I see on Friday, but it's an inside bar, who cares? Massive volume. I wonder if earnings came out on Friday. Don't know. You can see relative strength, OBV are strong. We had breakout and we had volume. Base, it was an up bar. It's an, this must have been a earnings gap up and a bit of a crap, as my guess, but we're up 4% on Friday on massive volume. This looks interesting here, and I like it. So what I can do, I can make sure my default watch list is set to my buys, apply, and then I can just add that to my watch list in case it's not there. CarMax has 2 dots. It looks okay, long ways. I will tell you that CarMax, AutoNation, all showed some momentum on Friday. The thing I don't like is when I also see things coming across telling me that car dealers are finally cutting prices, which means supply is catching up. I mentioned I like Capri, but I like Capri here. I like Capri down here. Now, why would I even look for it here? Simple, because my scan would have picked it up on this day. Okay, my EMS signal would have picked it up on this day. I look at this and I see a stock that looks great. It's, perhaps it's setting up to run again. So I think this is already on my watch list. So we looked at retail, we looked at communications. Let's look at real estate. This one, I think, is stealthy. And if you like dividends, there's some really interesting. Now, first thing you notice, there's quite a few stocks showed up, and that's because they're probably not extended. I do not know JGB Smith, and this is going to be what you see in retail. Major sell-offs, maybe sideways move, and starting to move. You have a momentum, a breakout, and a volume, relative strength trying to move. Now, I know on my buy list, I liked DEI and HPP. So DEI is here with 2 dots. Let's see. Again, a very similar pattern. Now, if I like anything more about this one is because it's taken out its 50, 2 dots, look at relative strength. And what I really like about this is, let's pull this down and see what we can see on the weekly. Kind of giving you a basing there. It's coming out of a squeeze, which I like as well. It pays a 6.3% dividend. So that one looked interesting. And another one which isn't showing up with dots, which just means it doesn't meet my bongo criteria, is HPP, Hudson Pacific Properties. When I saw Hudson, I used to think this was Hudson Yards in New York. No, it's a bunch of West Coast properties. So why did this not one pick up? Because it's not had a reversal within 10 bars. See, the last time it reversed was January 6th. So again, you're buying things that are probably too early, high risk of failure, but 3 dots, volume, breakout momentum, relative strength, and OBV look good. This one pays a 9.1% dividend. Let's go back to Well Scanner. Taking care of communications, retail, fintech. I don't think I have a fintech group. We looked at real estate. Let's look at semis, 811 and going up. See, the whole purpose of tools is to make your life easier. We are 35 minutes in. We've done a pretty exhaustive review of the stock market. So you notice no semiconductors made my criteria. So let's just pretend, let's switch to the bear just because I want to change this thing here. Let's change this and reset it. All right, let's drop in semiconductors. All right, so does that mean there's nobody in semiconductors? Let's look and see, which is possible. I said I've killed some groups. Nope, there's plenty of things in semiconductors. Why they're not showing up in CAT scanner daily? Just make sure I don't have something on. Oh, of course I do. Reset filters, apply. Now let's rank by dots. Analog devices. Are you going to do that? There you go. You know, choppy all over the place on daily and weekly, but on both it's above its moving averages. In a squeeze, don't like OBV yet, or relative strength yet. Now, why did this show up with 4 dots on the daily? Daily semiconductors, bullish. Oh, it doesn't have the dots. I ranked on the wrong thing. Silly me. Here we go. Any of these, Micron, I think they might have earnings coming up. I would check. But look at this, a fresh breakout on Micron. How attractive is that? Look at relative strength. Look at OBV. Now, is it getting extended? I ignore it. It's right on top of the 200. Everything's come together. Like, I have a feeling we're going to see a lot of things look extended because they're just getting back above the 200s, and they've been so extended to the downside. But Micron looks interesting. NVIDIA broke out on Friday. Is it too far gone? I mean, that's up to you. It's clearly one of the best semiconductor companies out there. So let's just go now back to my bull scanners, and let's just go to the combo buy, which is a bunch of high value stocks that I pull out of, high value means somebody else thought they were good stocks that I pull out of my list and I combine. And let's see if anything has got 4. So FHB is a bank. We talked that banks were moving up. Again, it's kind of in chop. It did have 4 dots because it had a big gap up here. Not much in relative strength yet. Might be worth watching. Bancorp Inc. of Delaware. Now the issue here is, did it go too far or too fast? I don't think so. And why would I say that? I would say that because it came out of a sideways move, 4 dots, massive volume. Look at relative strength in OBV. I mentioned APPS before. I used to make money on this stock. This was a model stock for O'Neill for a long time, but it peaked back here, like in early 2021 at over 100, and again in late 2021 at 94, and it's been in a downtrend. I just think there's a lot of trap money in here, but if you wanted to play it, you know, you're 20% away from the 200. You had 3 dots in a squeeze. I think there are better things to play. We looked at Chewy, GM. You know, everybody is on the Tesla bandwagon. I bought some Tesla as well. It was hard not to. But GM and Ford are going to catch up or pass them, I bet, in electric vehicle sales. When that happens, do they get value like a tech company? And Tesla's still very highly valued, highly sought after, and is strong. But at some point, these beaten down Detroit auto manufacturers or one-time Detroit might become attractive. You got 3 green dots in the turn up in relative strength and OBV. You could also look at Ford running right up here into the 200. Now, why do I comment a lot about the 200 overhead? Because things like to run into the 200 and fall. All right, so it's failed 1. I'm going to combine them 1, 2, 3, 4. This is the 5th assault. Now, if Ford was to break above that 200, that might be interesting and compelling. And let's just, Brixmor was another REIT, and this one has some things I like even more. I can't remember if this one has a dividend or not. Run up, sideways move, in a squeeze, 2 green dots, relative strength, not great yet. It's in an EMS signal. Why do I like this one more? Because it's above its moving averages. So that's also looking interesting. I found a lot of pretty charts this weekend. If I just go into my watch list and let me pull up my buy list. Now, this list I'm showing you are stocks that looked interesting to me and stocks that I am putting into a watch list, and based upon performance and additional signals, I might take some trades. Google, I believe, is in that communications division as well. It's got earnings coming up. If it breaks above the 200, this thing's going to run. But buying things going into earnings have got to be considered dangerous. Now look at all these green dots occurring when it broke above the 50. And look what relative strength did. That one looks interesting. Airbnb, I've never owned this. Never stayed at one. Probably never will. I'm too spoiled. I like staying at fancy hotels. But look at Airbnb breaking above the 200 here. Array has been one that I've been in and out of. It's a semiconductor in the solar industry. It's pulled back. Now you'll watch, and if it goes up tomorrow or the next day, you'll probably see the daily bond go to green. It's worth watching here. I think there are better looking ones. I mentioned Capri already. We've talked on this program about First Solar many times. And you can see First Solar has had a nice run. Now, some things did not work out well. I've looked at Celsius a couple of times, and I got comments, I don't understand why it's so highly valued, but I notice a lot of people are drinking it. And this is what I don't like. This stock basically broke out and failed. It's now below the 50 and the 17. Notice the daily and weekly bongo have gone red. The squeeze with mostly red dots. Relative strength is broken down. It's still one I watch because this one has a lot of momentum players behind it. There's your HPP. Here's another real estate. And again, like so many others, it's just bouncing around down here. And why does it show up? Because it has a lot of dividends, had some green dots. I'd rather buy the one that I showed you that's broken out. It was at Brixmor and is above the 200. Just look if there's anything else here that's really worth bringing up. I mentioned Shopify. This is another stock that is way, way off of its highs. You got to believe that nobody who paid 176, and this was 20 to 1, I believe, split adjusted, is still in this stock. Maybe it was 10 to 1. But this thing is a fresh breakout, all green dots. Relative strength and OBV are strong. And just like Tesla, it is a market leader right here. Breaking out. Can Tesla run up to the 200 before it gets nasty? Not impossible. So I think I've showed you a lot of stocks. Hopefully I hit some of the ones that you care about. And I'm just going to go back one more time and look at Snow. Now that you've seen some of the other stocks I like, here is a stock that is just broken above the 200. I told you the fundamental reasons why I'm interested. Look at the relative strength in OBV, and I'm going to probably look at a couple of these. So these are not investment advice. I have not suggested buy points, stops, options, or stocks. I've shown you some stocks that I'm interested in. And one more, this is a Bitcoin miner and collector and holder. MicroStrategy, again, another stock that peaked here in the 891 range back in November. If Bitcoin rallies, some of these companies like Riot and MicroStrategy are going to run. And I like the pattern here, just broke above the 200, great relative strength. Have an awesome, awesome week. I'm flying back on Monday, so highly unlikely there'll be a Tuesday video. I have a celebration on Tuesday, so we'll see if there's a Wednesday one. Have a great week, everybody. And thank you for watching.